Welcome to another fantastic episode or season or show of Your Money in Real Estate. We are going to be talking about your money in real estate. And I've got today's guest. This is probably one of the better guys I know. I've known him for quite a while. This is probably the first time I've had him on my show, but I've bumped into him over the years. Mr. James Hussaini, welcome to the show.
Thank you, Mark. Thank you for inviting me.
Hey, buddy. I mean, as I was saying out there in the hallway, you and I are just going to talk real estate because I know you got a heck of a lot of stories to talk.
Thank you.
Yes. Now, before we get into it, I always like to talk a little bit more about the background because a lot of our viewers, you know, they're out there where they're working, they're investing, they're looking at different things. How did you end up sort of getting into real estate?
Sure. In 2003, I got my license to be a real estate agent. And before that, I had been involved in all kinds of businesses. I had my own computer store. I used to import from China, you name it, and I have done it. And then I got into real estate. Within a couple of years, actually, I was the top agent in my brokerage in 2003. And I noticed and realized that being a salesperson is not a very long-term strategy for me. So I wanted to open my own brokerage. And at the same time, I was thinking of investing in real estate. And that's how I got involved into real estate, yes.
So, but you're saying in 2003, you got your license, 2003, you became the best salesman in 2003. So all of this happened in 1 year?
Well, to open your own brokerage, you know that you need a couple of years of experience. So in 2005, or perhaps it was 2006, that I opened my own brokerage.
Well, I outside there, you mentioned, and I'm going to mention it, is I know that your background is you come from Afghanistan.
That's right, yes.
And all of us Canadians, you know, we know that. And I love what you said. You said Canada is the land of
opportunity.
Right on.
Exactly.
And you and I, because I know my parents came from I'm a first Canadian, and my parents came to Canada, and I agree. And I look at real estate, and I jokingly say, there's one thing that the rest of the world can't make, and that's Canadian land.
That's right.
We have all the water, we have the resources. So I think your story coming from Afghanistan and how you ended up here is a good one to tell as well.
Exactly. I have traveled so far. I have counted to 46 different countries.
Wow.
And I firmly believe, and sincerely and genuinely believe, that Canada is the best country ever I have been so far, and Toronto probably the best city. The opportunities that this city and this country offers us, and especially if you're involved in real estate, that's even better and more and bigger opportunities.
Sure.
So this is where I feel home. This is where I feel comfortable. And whenever my plane lands in Pearson International Airport, I have a sigh of relief, and I just say to myself, I have arrived back home. So, and it is not only just business opportunities, but it is just personal inner peace and that this place offers.
Sure, we're a safe country, and we got a lot to be thankful for. Now, James, you mentioned in 2003 you got a lot of businesses. There's a lot of viewers out there that are, they've saved up some money and they got to start somewhere. How did it did it gel because you made them a lot of money in real estate, or you know what I mean? Like a lot of, they want to start somehow and they kind of don't know how. So how did it? I know you got into real estate and you saw a lot of things, but break it down a little bit for the viewer that's saying, "Gosh, I don't have a lot of money, but where would I kind of start?"
Sure, I started in real estate with only $20,000. I bought a property in Markham. This was a 3-unit property on Main Street. It still is there. It's 251 Main Street.
You still own it?
No, I don't. I sold it. This is a 3-unit property. I bought it with $20,000 down payment. At that time, I'm not sure if you remember, in 2007s and 8s, you were able to buy a property with 5% down. I mean, an investment property.
Yes, that's right.
And that's what I did. This was a 3-unit property. It was in one of the best places in Markham, right on Main Street. It had the potential of converting it to commercial property and all sorts of those good things. Yes.
Let me ask you. By the way, before I get into that, this is a call-in show, so I'm sure some of you would have some questions for James. He's got a wealth of experience that he would like to help you out with. We can talk about joint ventures. We can talk about commercial investing, and we're going to get into all that. So the phone number's on the screen. Give us a call. We'd love to hear your questions. But I want to talk, James, that when you sort of did your first deal, were you scared?
Yes, I was scared, although I was coming from a little bit of having background of real estate, being a real estate agent.
Oh, so you had already gotten your license then?
Yes,
Okay.
that's right. So I got my license in 2003, and this property was acquired in 2006 or 7,
Okay.
I believe. So I had a little bit of background and knowledge, but still, when you're buying your own first property,
Absolutely.
there is all kinds of fear in your mind, and the biggest one is how to handle people.
Yeah.
The tenants.
Well, you know what? And talk about that, because I know that, we talk about alternative investing on the show, using RSPs and, trying. But the reality is most people still own rental property.
That's right.
And dealing with tenants, I jokingly, almost every show I say, I'm getting tired of cleaning toilets. I'm getting tired of the midnight phone call, something happening and stuff. But have you had some bad tenant stories?
Oh, yeah, all kinds of bad stories. And that is the reason I got out of residential rental properties. I was in residential property investing between 2006 and up to a couple of years ago.
Okay.
And then I sold them all. I had at one time more than 50 units.
Wow.
Yes, and I had done condo conversions, apartment buildings. The biggest apartment I had was 36 units in Kitchener. So I have been through all that and noticed and realized that dealing with tenants and residential properties is not for me.
Good way to put it.
That's why I
Good
moved
way
on.
to put it.
Yes.
Because it is for some people. And you
Yeah.
know what? I honestly say if you do your due diligence, you probably got a good chance that tenant's going to be okay. But I found that once you get above a certain threshold, and then you need to start hiring people, then you got to trust that person's opinion of the tenant. And then sometimes I found that it just got crazy. And then before you know it, I was dealing with nothing but tenant problems. Well, not all the time, but.
That's right. The conclusion I came is that you have to either go really small or really big. And I will explain what I mean by that. Either you have to buy a property that is just a single unit, like a townhouse. That's my favorite investment. Or you have to buy a property more than 50 units. So handling a tenant in a townhouse is much easier. We're talking general, by the way. We're making general comments.
Exactly.
Because
opinions too. Yep.
Right. So the type of tenants that are attracted to townhouses are a little bit better quality than the ones that are attracted to $600-$700 unit rentals.
Got it.
So that's why my favorite, if someone is going to start, would be a townhouse, a small townhouse, a 3-bedroom townhouse for a small family. Or alternatively, if you want to go big, I would go big, like more than 50 units, because you can hire a full-time staff to handle management, then you're out of it. If we are somewhere in between, you're always involved, and I think quality of your life is way more important than dealing with all kinds of headaches every day, and you don't have your night sleeps generally.
I can so agree with that. That it's almost like a threshold, that it's that growth period that you got to get through, where you don't quite have the cash flow to hire a full-time guy to really handle the headaches.
That's right.
So you're really, all your time is spent just managing, your 40 doors.
That's right.
Yeah. And that's a tough
So
thing.
it is either, or, in my opinion, either very small or very big.
That's either go big or go home.
Yes.
Isn't that what they say? So you developed a lot of experience, but it sounded like you set up a brokerage, and it's called Home Life Dreams.
That's right.
And I heard that's not a small brokerage.
I have about more than 100 agents right now.
Fantastic.
That is working for me. I started again in 2006. It was end of 2006, so now it is 5-6 years of experience. But
how do you like? You went from handling tenants. How do you like handling agents?
It's better, but not ideal. Yes.
I've heard that.
Yes, because I think people have a lot of emotions, and same with tenants. They have problems at home, and sometimes they take out that landlord, and sometimes agents, same, they have all kinds of emotional background, and they come to the office, and you have to deal with people. We are always dealing with people, whether it is office or tenants or you name it. If you have good people's skill, then you have the opportunities.
Does the 80-20 rule apply in your brokerage, where 80% of your business is done with 20% of the people?
that applies. And sometimes I think in our industry, real estate in general, it might be 95-5. So it has gone worse than 80-20, because the 80-20 rules not only applies to real estate, it applies across the board. You name it, lawyers, engineers, architects, all the accountants. Usually 20% of the professionals have 80% of the business.
Yeah.
I think, I'm assuming here, real estate is even a little bit worse than that. Some people argue it might be 95-5.
Yeah. Well, there's no doubt that when you see an agent, when they shine, they're everywhere, and then you've got 30 or 40 other guys, and they might get one listing here and there, but it just seems like one or two guys always seem to dominate.
And I always tell my agents, there is nothing different or special between you and top producers. The only difference is that they are motivated and they have commitment. They have something in their life that is moving them.
What motivated you in 2003 to become the top guy so fast?
I think I have been always motivated since I was a teenager. I wanted to do something good for people. That is in my hearts of heart. I want to have free time that I can do what I want, which is serving people. I still have that passion. I have written my goal that I will retire in October 2015, October 1st, 2015. So it is approaching.
That's a couple years.
I had that date like 10 years ago, so I'm approaching, and I think it will happen.
I'm a huge believer in writing goals. In fact, I write goals, and I firmly say this: you write a goal down and it becomes like a magic formula. People talk about goals,
Right.
but I don't know what it is. I firmly, when you write it down and you stick it in your mirror and you write it down, there's something that happens. If I don't write a goal down, it doesn't happen.
Doesn't happen.
That one I can't figure out. It almost scares me. I write it down and it happens. So be careful what you write down. But James, I love to hear the personal story. When you say, helping people, serving people, what do you mean by that? What are you doing in?
I think we can have a whole entire show about this, but I have my own personal opinion that the main problem between people in general, from family to our world, the conflicts that exist, is misunderstanding. People across the board do not understand each other. So if there is something that we can do to bring people together and bridging those gaps, maybe there is an opportunity for me to serve.
Wow.
Yes.
And is that from you? I guess you developed that from your growing up as a child in Afghanistan, or is it just something that you've come to recently, or is it something you've always felt?
I think it's because of traveling too much. 46 different countries is not a small number. I think I have not counted the number of cities, but I'm assuming I have been through at least 80, 90, or 100 cities. And you can see all different peoples. They're
Right.
struggling with the similar type of concerns and issues that the whole humanity is. They want to have a good family. They want to bring bread on their table.
Yep.
And all the things. They want to have an income. All the concerns and issues that every day we face. The rest of it is just media playing out.
Let me ask you though, when you wrote your goals, because what you're talking about is a common thing that I think most successful people have, is they want to be successful, but it's not all just to buy the Mercedes and the BMWs. It's actually to change the world, to do something different. Did you have this goal when you originally?
I was 14.
Oh, so well before.
Yes, I remember even when I was 14, yes. I remember the day I had this goal in my mind.
Wow.
Yes.
And where were you at that
I was
time?
in India.
Wow.
Yes.
Good for you, James. Well, hopefully that's encouraging some people to say, you know what, I'm going to write some goals down and I'm going to make it so it's going to help the world. I want to get into obviously you started with residential, but you moved into commercial. Commercial financing is different. Everything about commercial is different.
Exactly.
What do you find to be the toughest part about commercial? Actually, before I get into that,
Right.
I'm hearing music in the background. We're going to take a quick break, and we're going to be right back on Your Money in Real Estate with James Hussaini. We're going to talk about commercial investing and how to make money in that way. Don't go away. Welcome back to Your Money in Real Estate with James Hussaini. We're getting into some very broad-reaching, big-sounding things about investing, starting small, growing big. And James certainly, I think it's by 2015, he's going to be retiring because of what's happened in real estate. And of course, as you've heard, that he's got some great ideas. But before we get further into that story, which we're going to get into commercial stuff, I believe we have Carmen on the line, and she's going to talk to us. It's been a while since I've talked to you, Carmen. Hey, Carmen, how are you doing?
I'm great. How are you?
Good. I'm supposing you had a fantastic summer because I keep hearing about such amazing things coming out of pro funds. Why don't you tell us a little bit of what's happening over there?
Oh, yeah, it's been a very busy summer. Actually, it was short, but very busy and very profitable. So it was a great summer for that respect. We have several projects that we're launching and involving investors and offering really significant returns of upwards of 15%, 16%. So it's been a great summer, very busy. People getting their RSPs working, buying real estate, a lot of mortgages. Yeah, it's great.
So Carmen, I know that, you're a mortgage broker. You also do straight up mortgages, commercial, but it sounds like the portion of your business is people can invest their RSPs with you, get, as you said, up to 15, 16% returns on these projects. And these are multifamily. What kind of projects are they?
Well, we have several different projects we're working on. We just finished one of them in Woodstock, Ontario.
Okay.
56 rental units that are being built. And the return was 16% on that investment, RSP eligible or cash.
Wow.
Minimum $25,000 investment. However, most people came in with a little bit more than that. But great opportunity. We're launching one right now in Kitchener. It's on a medical plaza.
Wow.
And the return is 16% as well. So if anybody needs any information or would like to get some information on that, they can visit our website at profunds.ca.
Carmen, that's fantastic. And yeah, your number and website are displayed. And of course, you can give me a call and I'll help you out with that. So Carmen, thanks so much. Good to hear your voice again, and we'll be talking shortly again. Take care.
Okay, you have a wonderful evening. Thank you.
Thanks. James
All
says
right.
hi, by the way.
Okay, hi. Hope
Thanks,
we see
Carmen.
you soon.
Okay, bye-bye.
Okay. Bye.
So there's another investor, as you can tell.
I know her.
She's always got stuff on the
I
go.
know her, yes, and
Yeah.
she's doing well for herself.
Just like yourself. So let's talk about, you start off with a triplex, you start off with your license, and obviously you're motivated. You write your goals down, and that probably was one of the things that helped you. What other thing helped you grow your real estate portfolio?
Sure. Initially, I started with buying few properties, duplexes, triplexes. It ranged between Markham, Oshawa, Barrie, all across. And these were like top towns according to RAIN. I used to be a RAIN member, so I bought properties there. Then I forgot exactly when, but probably within a year, I started buying larger properties, and I was interested in condo conversions.
Okay.
So I bought apartment buildings. My first project was in a small town called Grimsby. This is on the way to Niagara Falls.
Yeah.
I bought 7 townhouses and converted them to condominiums. It was a good project, actually one of the best projects. And then I moved on and I sold that, and I bought 36 units in Kitchener, Ontario. I converted that one to condominium, and it was sold May or March this year.
Yeah.
Yes.
Again, just want to let you know that this is a call-in show. The number's on the screen. James has a wealth of experience. We would love to hear from you. Any kind of questions, from financing to tenant issues to commercial stuff, anything, even being real estate, listing property, how to deal with that. We're going to get into that. So give us a call. So James, back to that now. I want to talk about, so you started with residential and you moved into the commercial, but is the number one motivator for moving into the commercial really, was it tenant issue, or was it financing, or was it that you could make more money in commercial? But before we get into that, did you doubt, because you mentioned RAIN, and I want to talk about that because a lot of people talk about RAIN. Did you dabble with the joint venture stuff before we talk about commercial? Did you dabble? Was it all your own money that you used?
No, it was, of course, other people's money. And I did joint ventures, but I created a group and I brought some people on board, and That's how we attracted other people's money. Okay.
Now this will get the phones ringing.
Right.
How you attracted other people's money. Because
Right.
I most of our viewers, again, they watch, they got 15, 20, 50, who knows, a little bit of money. They want to get in real estate,
Right.
but they don't quite have enough. And I say create relationships and create partnerships.
Right.
How did you do that? How did you create your partnership? Or group, as you
yes,
say.
sure. Yeah, I created a brand. It's called Crystal Group, and that group was branded. It was promoted as an investment company, real estate investment and
Good for you.
management. And we had seminars every now and then, every couple of months or so. We traveled across Ontario from here to Ottawa.
Wow.
Having different seminars and building the brand and then raising some funds. But most of the funds came from close family and friends and people
Got
that
it.
trust. And it was some large amounts. I think the least amount we raised was 100,000 and above. So
So your least amount was 100,000.
100,000.
Wow.
Our minimum requirement was 50,000 because we were going to work on some bigger projects.
Sure.
Yeah.
Yeah. And so is Crystal Group still operating? Or
That's right, it is,
That-
yeah.
Well, good for you. So there you go. So if for people out there, so starting a group, and it sounds like the majority of his family and friends, it's your inner network, right?
That's right.
Utilizing your inner network and building your database from that.
Right, yes. But I moved on from Crystal Group and created Business Point. And the Crystal Group was mainly focused on residential aspect of this business. And when I say residential, there is a gray line here. As you know, the apartment buildings, some people consider it as a commercial. From financing perspective, especially, that is considered as commercial.
Anything above a 4-unit,
Is
banks consider commercial.
commercial,
Commercial.
that's right. But for me, commercial means office and retail and whatnot. So there is a little bit of a technical issue there. For financing purposes, apartment buildings are commercial.
Right.
But when I say residential, I mean even apartment buildings, 1 or 2 or 10 or 50 units. Yeah.
From the management side,
That's right.
You know, dealing with residential tenants versus commercial tenants, 2 totally different contracts.
Exactly.
And that, to me, I think is really the foundational difference of how you can make money and or sleep at night.
Right.
is in the contract, right?
That's right. I moved on from, let's say, residential, for a lack of better word, dealing with residential tenants to commercial and established Business Point. We bought office buildings. I was interested in office buildings and rented office space to.
Well, let's talk about, so again, that's a transition you made, but Business Point, so you took Crystal Group, which started in residential, whether it was apartment buildings, what you were dealing with tenants,
Right.
residential tenants. But was it in terms of Crystal Group, was it a group decision, or was it just that you found a great business building and you said, boy, we're making more money in office, we should maybe move our funds into the office space, kind of?
Actually, well, that group we were 4 people, and we are still 4 good friends, but we all moved on our own ways. It was a decision that we all 4 take, and I was more into commercial real estate. I honestly didn't like much of dealing with tenants. I was tired of it. I lost some hair. It's not visible,
You're not
but I
doing
lost
too
dealing with these tenants. I wanted to move on, and I'm happy I made that move.
And so the other guy stayed, like with the residential stuff, or?
No, one moved to industrial and the other one to property management. We all had our own specialty in that group, yes.
Okay, so talk to me about Business Point, because I know Business Point is your website now, and it's your main focus. On top of Home Life Dreams, you also have a company called Business Point, businesspoint.ca. So what is Business Point?
Basically, in a nutshell, we buy half-vacant office buildings and then try to fill it up. That's as simple as it can get. So we buy it, as you know, investment properties are so.
Well, and I don't mean to cut you off, but half-vacant office buildings. So you particularly look for buildings that are probably not doing so good.
That's right. That's my specialty.
Tell me about that. Tell me why would you do that?
Sure. So the investment properties are sold, as you know, by cap rates. And cap rates are based on existing income, not potential income.
Okay.
So if I buy a property based on existing income and there is a room to fill and increase the value, that is, I think, the best strategy, because I have done condo conversions and I have done land redevelopment. I still have a property in Aurelia that I have done development and I think the real value is added when you increase the revenue, not just a fake show off adding value,
Yeah.
which is land redevelopment.
I got a thing here, and I've talked about it, and I talk about it all the time. When you change the use of anything you buy in real estate, that's where value comes.
Right.
The issue is, of course, taking a cornfield to a condo, taking an existing tenant building, adding a unit, fixing. You're changing use is how I personally believe is the bottom line of making money in real estate. And you just said it, real value, not just changing.
We have to be careful with changing of use because I have done it. When market shifts and there is no longer demand for that change of use, then there is not much of a value added to that. And I will give you examples of that. So let's say if you buy a land and you redevelop it, and which I have done it, and if there is no demand to build houses because of shift in economy, there is not much of value added to that land. Or even in my case, which I have done few condo conversions, if there is no demand for investors buying that change of use from apartment to condominium, there is not much of value added. And I really realized that after doing those so-called adding values, and notice that the real value is added when you increase revenue, when you have more income. And that is something that we have to be careful. Even if it is the best and highest use of a property, if there is no demand, there is not much value added.
But I'm having a little bit of trouble understanding. I know that out of all the investments out there, residential is probably the easiest to get it to start with.
Right.
As you move up the chain, I'll call it, you get into office space and things like that, and you're buying half vacant. Where's the demand? Obviously, the vacancy is there because there isn't a demand. So how do you convert or change a half vacant building and increase the cap rate? Because you're making reference to demand, but obviously a full apartment building means that there's no vacancy. A half vacant office building means that no one wants an office space.
That's right. Usually the problem with half vacant properties are management, and tenants are not happy, and it involves rebranding, attracting tenants, quality tenants. You might have to spend to add value, the real value, to attract quality tenant. These properties that I have acquired, office buildings, are in good locations. So it means location is not the issue, it is the issue of management. It has been abandoned or lack of proper management, because there is a huge difference between rental property management and office building property management. It requires a little bit of more specialization on how to deal with tenants, because they need some quality service. It's an office, it is their prestige, it is their image. They have clients walking in, they demand certain services, which maybe someone that has done residential properties may not notice that. So
you're referring to, it sounds like, creating an image, a brand, that all costs money.
it does.
So when you look at a building, you're probably right away going to have to spend money.
Exactly.
Yeah.
Exactly. Yeah.
And when you brand it, are you branding it for any particular tenant, or are you just cleaning it up?
It involves everything. It involves cleaning it up, but also it involves branding as business point. It's like you can say franchise, or a name that will come with it.
And we'll talk about that right soon, about a minute and a half on Your Money in Real Estate. We're going to take a quick break. Don't go away. Thanks. Hey, welcome back to Your Money and Real Estate. We are talking to James Hussaini from Home Life Dreams and Business Point. We are going to, best part of the show, I will always say that, the best part of the show, is we're going to take a deal and you're going to show us how you're making money. And I think it sounds like you want to talk about, Business Point strategy. And I find that, during the break, we were talking about, boy, a vacant office building, that's a pretty risky venture.
That's right.
Most people say, a couple tenants here and there in the residential, but let's take a deal that you've done, and we'll call it a Business Point, just so I don't forget the name.
That's right.
So it's an office building. It's only office buildings you guys look at.
Well, we have retail sometimes at the main floor, at the lower level.
I got to ask you, can people invest in Business Point? Like, in other
Sure.
words, people watching right now, and again, it's a call-in show. Give us a call. Let us know, some questions or concerns. But you've obviously got a huge amount of experience in making money in real estate. If someone says, hey, listen, I've got $100,000, can I invest in Business Point?
Sure. We can consider that, yes.
Kind of returns they would get, you think?
Maybe we can give the example and
Sure.
we can look at the
Absolutely.
returns. Right?
A good idea.
Sure. So I can give you, I think, one of the properties that we have acquired in Markham.
Okay.
The price is $5 million.
Okay.
This is a 15,000 square feet property in downtown Markham.
So it is in a good location then.
It is in a very good location.
Now, when you bought it, was it 7,000 square feet of emptiness?
Well, I will tell you the details.
Sure.
This is a 3-story building. So one story is completely vacant,
Okay.
which is 1/3 of the building.
Okay.
The income is 300,000
Total for the year?
net income.
Net
income.
Explain the
Net-
difference between net. Go through that.
Sure. Net income is after you take all the expenses except your mortgage payment. So all expenses such as property taxes, utilities, property management, all the expenses that you have to pay for the building, maintenance, capital improvements, all kinds of expenses that come through for the office building. Once you take all those expenses, then you come with the net operating income.
Right.
I have to correct myself, actually, not capital improvements, yes,
Okay,
but all the operating expenses.
That's right. So net operating income, NOI, on a financial
Yes.
pro forma or spreadsheet that you would look in a business building, NOI is a very important number.
That's right.
And that is the one that also determines the cap rate.
Cap rate, exactly. So based on that number, the cap rate for this building is 6%.
So 6% cap.
Right.
So you paid 6% cap based on that number right there.
Right. If you divide 300,000 by 5 million, you will get 6%.
Now, I got to tell you, when I initially look at this, I go, man, you paid too much for it. Because, first of all, you got 2 floors that are vacant.
No, 1 floor, 2 floors that are occupied.
Okay, sorry.
Yeah.
So 1/3 of the building is vacant.
Vacant, yes.
And, well, mind you, then you must have had something up your sleeve.
I did my research. The cap rate for that area is 6% because it's in a prime location.
Yeah, but not with one vacant floor.
That's right, but the income is based on just for the 2 floors.
I understand.
So that's why there is a potential for the 3rd floor. So let's say if you occupy the other 1/3, it will be 450,000 income, or at least 400,000.
Well, yeah. So based on this number, you can determine what you can get for the 1 floor vacancy. So you're
Right.
saying this number should be 450.
Yes,
And if it's 450, well, then suddenly your cap rate would jump up to 9%.
9%.
Yeah.
But the property value will increase from 5 million to at least 7 million.
Well, then your cap rate drops too, though.
That's right, because the going cap rate right now in the market is somewhere between 6 to 6.5 for that area.
For office.
For office.
And I know that in reading, and I know a lot of our viewers out there, the way REITs are buying stuff, 4% cap, 5% caps, I'm seeing unbelievably low cap rates out there.
That's right. But 4-5% is usually for the apartment buildings.
And just as a rule of thumb, just for our viewers as well, the higher the cap rate is usually a higher risk factor because, I've always sort of put those two together. That when I see a high cap rate, you see high cap rates up in Tuktoyaktuk or something, where no one thinks, oh my God, who's going to rent up there?
Right.
That's because there's not a lot of economy up there.
That's right.
Downtown Toronto is getting 4% cap rates.
Oh,
barely.
exactly. Sometimes even less than that if it's a AAA tenant, like
Exactly.
TD Bank or CIBC Bank or
So,
RBC.
so there is a connection. I guess the point I want to make is there is a connection between cap rate and risk.
That's right.
And so when you're buying 6%, you did okay. So tell me though, how did you take it from 300 to get that 450 mark?
Well, actually, this property is still in process, so we're working on it. So what happens is that when I take this property, some of this space is occupied by Business Point as a business center. So we share common resources such as internet, boardrooms, and things like that. So as you know, the trend right now is that most small businesses may not be able to afford to have a whole floor or a bigger space with boardroom and whatnot. So they would rather rent a small office, just an office, and then share the resources. And that's what this Business Point is. It's a business center too.
Okay, so Business Point, although it's a business center, it is also your business of buying buildings and renting out one floor to Business Point and getting returns from the other two floors.
Exactly. That's right. So let's say if I have one floor not occupied, that can be established as a business center.
So then you would have taken, so you had two floors rented, you would have taken this one floor, or you are in the process of taking this one floor and putting in their Business Point franchise.
Exactly, that's right. So it is a combination of running a business, which is Business Point, and investment in office building. I have combined those two. Yeah, so it's a complementary. One is complementing the other.
But let's call a spade here. You got to put money into creating a really nice office space.
That's right. Yeah, some of the buildings I have to. In this one, I didn't have to. So the process takes about a couple of years to occupy that vacant space. So my strategy is to take a couple of years, fill this space, and then go back to the bank and refinance.
Again, this is a call-in show. The numbers displayed. Please give us a call. He's got I think he's got some great ideas and some great questions here we can ask. So give us a call, ask James or myself any questions in real estate, and we'll do our best to answer them. Now, James, you mentioned something that caught my eye. You take a couple years.
Yeah.
So are you able to, with this NOI, are you able to sustain the building without the Business Point?
I will never, ever buy a property that will not have a break-even cash flow. That is my minimum. So that $300,000 will cover all the mortgages and everything. So even there is a little bit of a cash flow, but my strategy is not to buy a property that will not cover itself.
So you're really looking for buildings that are semi-vacant, and then you move your business,
right?
You move your business in there,
right,
into that vacancy, and then over the next couple of years, you build up the cash flow based on the business. So in other words, you don't really look for tenants.
Right.
For the whole floor, you look for very consulting small companies.
Exactly. Like these are advertising agencies, website design, architects, that they don't need a whole lot of space. They might use the boardroom once in a while. So those are the resources that we share.
Wow.
Yeah.
And I know that there's a lot of business models like that out there. I mean, is there a high demand for something like that now?
Well, it's a specific market segment, and I have my staff working on it to attract tenants, and we have been doing good so far, yes.
Yeah. And how many, okay, on this particular building, how many desks do you rent? Like, I guess you rent the desk, really, kind of thing, right?
It's a small room, yes.
Yeah, a small room, and then you share the secretary, you share the boardroom.
Exactly.
Okay, so how many desks or rooms would you have in?
Well, about 15.
15?
Yes. 15 different units, or you can call it units or a small office. Usually they're 10 by 10 or maybe 15 by 10, depending on different sizes, yes.
And the leases are standard commercial leases, or how does that work?
They're standard commercial leases, but they're flexible. So it ranges from 1 year to 5 years.
Okay.
So depending on the strategy and then the planning of the business that the people that are occupying, and that's why these business centers are very flexible. Sometimes you can even rent on monthly basis, hourly basis. So we have a conference room, seminar room, and a training room, and you name it, it's all there for them. Those are the common resources.
As you're talking, I'm saying, well, that's actually kind of ingenious, because what you've done is you've broken up the one floor into 15 different little apartment buildings.
Exactly.
Kind of thing.
That is where the idea comes from.
Yeah.
So that's why it might be a good idea to go through those residential troubles to get there, because you cannot all of a sudden jump to this. It needs a little bit of expertise, a little bit of background, and dealing with people, yes.
And I think, the word that you're saying is it takes a couple years to really get this thing rocking.
It takes a couple of years.
Yeah.
It takes, and you have to be patient.
And deep pockets.
Not necessarily. Of course, the down payment, you need a big amount.
Yeah.
I mean, the banks need a big down payment, but sometimes for running it may not necessarily, because I make sure that it is sustainable just from the existing income.
Wow.
Yeah.
So this particular building here, so have you achieved the 450 yet? Are you there yet?
Well, actually, this particular property, as I said, we are still in the process, but I have other properties in North York, and I have a property that actually I'm closing in Oshawa. It is similar model in different price range. And so let's say if we achieve that goal within a couple of years, based on the same cap rate, the property will be valued at $7.5 million.
So your business plan says in 2 years, this value you just earned $2.5 million.
Exactly.
But now out of that, there's no expenses. You're saying all the expenses are covered out of here?
I will make sure the expenses are covered from the existing income.
So you're saying 2.5, that's a clear net?
Well, of course, there are sometimes other kind of expenses like management, advertising, and marketing, and staff, because it takes, I have, I think, around 5-6 people full-time working on this. So there are some expenses out of that goes to that. I can't tell you the exact number, but maybe 500,000 or something.
And we're going to continue this conversation in a minute and a half with James Hussaini. Don't go away. We'll be right back on Your Money in Real Estate. Hey, welcome back. I'm getting cut off so fast here because James and I are almost cutting a deal. Our business is growing and we're looking for some office space, and I really like what James is saying here. I'm thinking maybe James and I could cut a deal right live here on TV. Wouldn't that be a first?
Exactly.
But no, seriously, I was just saying to him, I said, gosh, I really like this model of how he takes an office building. That's not my expertise. I got my expertise is in another area. His is an office. So I'd like to talk about specifically, how if someone says, hey, you know what, James, I got either money or I've got an office building. How would you work with someone like that? Tell me how your business model will work.
In the past 6-7 years, I have worked with two models. One, I call it 10% straight interest only, and these are the type of people that kind of are friends and family, and there is a trust involved.
It's not working at all.
So it is straight 10%.
So you do a straight flat 10%.
Yeah, and I only do on deals that there is enough money to pay for that 10% from the cash flow.
Yeah, of course.
Otherwise, if there is not enough cash flow to cover that 10%, then I do 50-50, which means they come with the money and I do the work. At the end, we do share the profits 50-50.
Okay, so the 50,
those are, sorry, go ahead.
No, but that 50-50 is a model that I know a lot of people we've talked about where I brought other, and they talk about a joint venture where the guy does all the work and the other guy does all the money.
Right.
Is that the model
Exactly.
you're talking?
Yes. It's very simple. So you bring the money, I bring the expertise, I find the property, I bring up the property, and then at the end of the day, we will share the profit.
Okay, and so you're probably looking for a passive investor too, though. Like you
Passive, yes.
Yeah, someone that says, "Look, here's the money. Call me in 2 years when I can get a piece of that."
And we have a clear exit strategy. So let's say if we cannot sell in a couple of years, we can confidently refinance to take out the principal amount, if not the profit. So at least we are confident that the principal amount will be returned within a couple of years. The profit is where there is a debate. If it will sell, then there is a profit.
Yeah, and of course, in refinancing, you know, you either buy out a partner, and you know, there's different strategies of moving a joint venture partner either out or moving you out. I mean, I've done refinancing and I've been bought out.
That's
saying,
right.
That's right. Take my money and
Yes,
run, you know.
yes. But we usually, I mean, the strategy is that within a couple of years we pay back the principal at least by refinancing if the property doesn't sell.
Right. So your principal payment is at least bare minimums covered.
That's right. And so far I try to keep the control because I know what I'm doing. So if an investor is investing, they have to give me the money. They have to trust my judgment. If I decide to sell, I will sell. And if I decide to refinance, I will refinance. Because we don't want to be in rush selling at a price that we don't want to.
Absolutely.
And we don't have to.
Yeah. Would you only look at the business point model, meaning that whatever building you look at, you want to include the business point office space system?
That is the only model that I'm focused right now. In the past, I was into so many different things from land development, and we didn't get an opportunity to discuss about those into condo conversions and rental apartments. But now my only focus is business point and buying office buildings that are half vacant.
Well, you know, you're talking about something that I just, in a meeting today, I said, the more specialized I become, the better my business gets.
Right.
And you're kind of saying the same thing.
Exactly.
That you know, sure, in real estate, land developing, more real estate, there's so many, there's gazillions of ways to make money in real estate. But you're saying, no, I'm sticking with this.
That's the only thing.
Right, but talk to me then about the mistakes or stuff that you didn't make money on that drove you to say, you know what, I'm not going to do land developing. You just mentioned that you didn't have a chance. Talk to us about.
Sure, we still have that property actually. I bought a property that there was two properties, a triplex and a fiveplex on a property in Aurelia.
Okay.
The land size was 200 by 200, 200 feet by 200 feet. So it was a good size land, about 1 acre land.
Is this the one on West Street?
That's right.
Okay, I'm going to tell you right now, I used to own that. You bought it from me.
Really?
Yeah.
Wow.
You bought it from me. the one that backs onto the school.
Exactly. Was that your property?
That was my property.
I can't believe that.
In fact, I can tell you, I know this property inside and out. I used to bring out my grass machine. We can talk all day long. And when you started mentioning two houses, and you know, there's one's a triplex and the other's a two-story. Yeah. That upstairs unit I built that. I built that apartment in the very top floor.
Yeah, it's not occupied.
It's not occupied yet,
yes,
though, right? Yeah. I don't know why, but I worked my butt off to get it occupied.
That's right. Then we bought it, I think, in 2008 from you.
That's correct.
I can't believe that. What a small world we are in.
If you pull up your things, you're going to see a numbered company. Anyway, long story. Small world. James.
Yes,
small
exactly.
World.
Small
so
world.
let me tell you, though, I looked at taking that property, exactly what you're saying, and townhouses. I was going to look at putting townhouses. Back then, I was strictly into rentals, and I couldn't put that together. Now I could look at something like that. Because now, it's what, 2008? That's all I've been doing is working.
Anyways, we have done the job for you. It has,
Good for you.
It has developed into 18 townhouses, approved. It is set to go ahead. Everything is done. But I don't want to get into building and construction. So I'm looking for a builder to build.
Then I'm sure you've approached the same guys I would have.
So we are making another deal now?
Maybe we can. But as some people know, I mean, I invested a lot in the Bay Area area. Right. And that was, in fact, my first show with Rav, as I was talking about Barrie. But I do know some builders up there that would probably be very interested. Have you approached anyone yet on that?
Not too much. We are not very aggressive because, that property cash flows nicely.
Yes, it does.
The best thing in Aurelia...
You paid $530.
That's right. Yes, yes, $530.
Yeah.
The good thing about Aurelia is that the price of property is so low, but the rental is
it's
so
still strong.
high.
Yes, it's almost as strong as Barrie. You're absolutely right.
And the rental actually is similar to Toronto. We have rented excuse for my language, crap houses for $950, $900, $1,000 two bedroom property. So the rental is similar to Toronto, but the price of houses are probably 1/4.
Wow.
Yeah.
Give us a call, please. As you can tell, James and I, we've got a bit of a history, probably more than we even knew. We're probably going to make a deal here. So maybe you can see how two guys negotiate. So I got to tell you that okay. So you have that. You did all the site planning to it. You've got the approvals with council.
Everything is done. It is set to go. Yes, it is set to go.
Let me ask you. Here's my question then. I'm going to step out of my host shoes. How much per door are you asking? Because by that number, I know right away how much to build, maybe how much to sell.
Sure. Initially, we thought we were very ambitious, so we were asking close to $1 million. But now I will be satisfied with more than anything above 700.
We're gonna go for beer after the show. In fact, I just heard the show's going to be over 3 minutes because I think we'd be because I also know that the absorption rates in that town are not that strong. So 18 units would probably take 1.5 years to sell. I personally think that. Like in Toronto, man, that'd be gone.
But in my opinion, the good thing about 18 units is it's not too big and it's not too small. It is just right for a small builder.
It's perfect. But I also know there's a couple of guys in town. There's one guy around just past West Street. There's another guy, Titan. He's building into. Let's face it, it really is a small town, but it's a solid town.
And Target just moved in a few months ago to that area, not too far from this property.
The old Walmart.
The old Zellers.
The old Zellers.
Yes.
Oh, wow. Yeah. Boy, James, we definitely have to do some. But let's talk about you for a second here because we only got a couple more minutes. Talk to us a little bit about, wrap up, maybe your home life dreams, your business point, because we only got about 2 more minutes. But what you're doing and what your future plans are. You're going to be retiring in 2015.
Yeah, I would love to help the viewers to invest in real estate. I would highly encourage you to consider real estate as a retirement option. This is the best decision that you will make in your life. This is the best decision I have made. I have been in several businesses. Most of the businesses is not easy to make a good money. Real estate offers a good opportunity for an ordinary man like me.
Yeah.
I have been through all sorts and different aspects of real estate, from residential to commercial. Of course, getting into commercial is a little bit risky and you need deeper pockets. My ideal property will be this. If I want to give advice, I will buy a townhouse in a little bit of a rundown townhouse so that it has the potential to renovate. It should be in a nice area so that and in a good quality neighborhood that you can attract quality tenants. I will not buy a townhouse far away from my home or my work. I would rather prefer to see it at least once a week. Management is easier. You can attract quality tenants, as I said earlier, if it is a townhouse as compared to an apartment building. Because that townhouse is somewhere between living in an apartment and owning your own house.
Right.
That is my experience, because I still own a townhouse in Whitby and it is cash flowing so nicely and there is a nice family living there. That is my best experience and my best advice that I would give to anyone starting and investing in real estate.
And then I guess start, as you said, start with something like that.
Right.
You're most confident with that, and then obviously either call you, ask questions, grow, mentor. Like I always talk about, working with someone. So James, I cannot thank you enough for coming on the show.
No problem. Thank you for inviting me.
Hey,
It was a
buddy,
pleasure meeting
nah,
you.
you're a humble.
Now we are sharing a history. I can't
You're a humble
believe-
man.
Thank
you so much. Thank you so much for joining James and I on talking about a deal on your money and real estate. Take care. We'll see you next week. Bye-bye. Townhouses. So I brought in an investor and we tried.